Hello everyone and welcome back. My name is Greg Furman and this is the VantagePoint AI Market Outlook for the week of July the 6th, 2020. Now, to get started this week, we're going to begin where we left off last week with direct intermarket correlations to assist us in our trading week. We've got a very high correlation in all markets to the global equity markets, more specifically the S&P 500. When we look at our intermarket correlations from last week, I had discussed at length how a number of different markets, more specifically again, currency pairs, are following the S&P 500, as is the dollar index. Now, the dollar index prior to all of the COVID stuff starting up, there was basically a positive correlation between the dollar and the S&P 500. During this the economic lockdowns, that correlation started to break down. We saw the dollar break away and more of a risk-on, risk-off environment. But we can assess here now that that correlation is starting to come back very, very slowly. When we look at the currency pairs that we discussed in last week's weekly outlook, that has come to fruition. As the S&P 500 has made a move higher, we can assess that the Aussie US dollar has followed it. When we look at the British pound against the S&P 500, the same thing. We're seeing that everything is dependent on the S&P 500 going up if they're going to make gains against the dollar. The euro, we can assess here again, basically the same thing. Now, this is an unusual correlation because, again, as I had discussed, prior to this, all of this, the COVID, the global lockdowns, everything else, there was an inverse correlation between the S&P 500 and the euro. And then during the COVID, the lockdowns and everything else, we can see that there became a positive correlation between the euro US and the S&P 500. So right now, as the S&P 500 starts to rise, we can see here clearly that the euro is responding very positively to that. Now, with a pair like the US Canada, where the US dollar is the base currency, we notice that there's a very strong inverse correlation, meaning that if the S&P 500 goes up, the US Canadian pair is going down. Now, again, in my respectful opinion, direct intermarket correlations using the VantagePoint software will get you out in front of the market. Because again, this is an outlook, not a recap of something that already happened. We're looking at this going forward and how we can trade each week and what are the driving factors. You have a number of people that will use Fibonacci, maybe Elliott wave, different types of Donchian bands, Bollinger bands, all kinds of different wild and wacky indicators, which is fine. But again, the intermarket correlations are what really drive these markets. When we look at the S&P 500 to a commodity like oil, these two charts are virtually identical. So if oil is going to continue higher, then it is basically it's relying on the S&P 500 to stay strong. If we look at gold, there's somewhat of an inverse correlation here. So if the S&P 500 were to break out, that would actually put downward pressure on gold. So again, understanding all of these different moves is what will get you out in front. Or if you're in a trade and you're not sure, then if you go to these intermarket correlations, they will assist you in determining whether you should stay in that trade or not. Now, again, even with Bitcoin over the last 6 months, there's been a very positive correlation between Bitcoin and the S&P 500. Yes, that correlation is broken down somewhat, but not enough. It's still there. So again, if the S&P 500 continues to advance forward, then that would suggest that Bitcoin is likely going to go with it. These are the correlations we watch. With the dollar-yen pair, you can see that these two charts are virtually identical, but often the dollar-yen is the leading indicator here. So again, if we're trading either one of these pairs next week, or if we're trading the S&P 500, and the US-Japan pair, that we may not want to trade both of those at the same time because of the extremely high correlation. Now, once we've identified these correlations and how powerful they are, we then come to the VantagePoint indicators using our verified support and resistance zones, our neural index, a modified RSI. Again, these are all the indicators we need to identify price direction once we understand the intermarket correlation. So with the dollar index, we have not really advanced anywhere here. We've had a better non-farm payroll number, but we still have the VantagePoint verified resistance and the VantagePoint T-cross long. These are the same levels that I've discussed for the last 2 or 3 weeks. We must break through the 98 level. We've got very powerful resistance between 97.50 and the 97.70 area that's been unable to break. However, in this sideways move, we are also making somewhat higher lows here. So there is still the real possibility that the dollar index can break out. But again, when we understand our intermarket correlation, there's 100% inverse correlation between the dollar index and, for example, the euro US currency pair. So we've got the euro sitting here that can't advance, but it's not really moving lower either. So your longs on this particular pair, the safety net here, if we were to go long, we would look at the T-cross long at 112.34, and then we would cross-reference that to the dollar index. As long as the dollar index is below the 98 level, the euro US is simply unable to move lower here, guys, much below the 111.70, 111.80 area. But we're really struggling to get and stay below the VantagePoint T-cross long at 112.34. So again, if you're trading the euro, you are trading the dollar index, and you are trading things like gold, things like the S&P 500. They are all in there, but the basic price action is the dollar index. So when we look closer at the S&P 500, these are the things we want to watch in our trading, because again, it's very difficult for a single indicator to show us this. That's why we use the intermarket analysis tool. When I identify the S&P 500, we are at very, very strong resistance here. This level is coming in at 31.44, the same level we discussed last week, and even stronger resistance up at 32.19. So again, in my respectful opinion, unless we can break through both of these levels, then there's still considerable downside risk on the equity markets. However, the VantagePoint indicators are telling us that we still have room to go higher, so we will continue to monitor this, but I would recommend extreme caution on longs between this level of 31.44 and again, this additional verified resistance that's coming in at 32.19. Now, when we look at gold and we have a comparative analysis, once again, we cannot seem to break through this 1800 mark. We get very close to it, and then we always go sideways around this particular level. Our main support is now coming in at 1766. If we click on our F8 here, this is the key pivot area that we want to watch, 1785. The predicted moving average by itself is a very powerful strategy because, again, the correlation to 31 other markets is built into this blue line, and we would look, the primary theory is that if we're above it, we're long, if we're above it, we're short, but if we can't hold above this particular level, then we are likely moving lower into that 1760, 1750 area. And again, when we look at other commodities like oil, oil will continue, as you've seen in the direct split screen chart, will very much follow the S&P 500. So in most cases, oil is strong at this time of year based around the seasonality of the driving season. But again, we still have social distancing. The economy is not firing on all cylinders yet. You've got more cases coming out. So we're not out of the woods here by a long shot. So if there's any further, coming from the media that there's a lot more cases that are coming into the system here, then the real risk is they could close the economy down, go into a lockdown again. So we have to always remember that, guys. Now, when we look at additional markets like Bitcoin too, Bitcoin still is showing that there is likely an investment here. Now, if the S&P 500 can break higher, with Bitcoin, we're looking for Bitcoin to push through the 9180 area. Now, again, I've added Bitcoin to the AI market outlook because I believe that there is an investment here. And, Bitcoin has tripled this year. It tripled last year. I know that some of the bigger names out there, like Warren Buffett, have made very negative comments about Bitcoin. But in my respectful opinion, he's as great as an investor as Warren Buffett has. been over the years, he's also made some pretty bad calls here, particularly in the currency markets, and Bitcoin is a type of currency. So I look at the numbers, I look at the charts, and I'm saying, no, I think we still have an investment here. Good, bad, or indifferent, I think it's worth it. So Bitcoin right now, solid, very, very solid support here coming in down around the low at 88.48. So unless Bitcoin can take out this level, I think that there is the possibility of yet another long entry coming up this week. We've got our medium term crossing our long-term predicted difference. So there's a lot of stuff going on here. The RSI is starting to flatten out. The neural index is turned green to match the pink line crossing the blue line here. So watch for a potential reversal again on Bitcoin this coming week. Now, we did discuss the euro here, so we're going to already in the intermarket correlations and the main levels to watch. Some of the other currencies that we want to keep our eye on this coming week would again be the pound dollar. We have a long trade trying to form here. Key support is coming in at 124.45, but once again here, guys, if we go with our long predicted and our blue line by itself, we've got 124.29. That's the area to watch to begin the week. I can almost guarantee you to a degree of about 80% that the market will come to this level on Monday. When it does, then we would use that as a pivot area to potentially get long. But again, you must watch and make sure that the S&P 500 is holding on to its gains or it's not selling off, because the pound dollar will react to any violent sell-off in the S&P 500 will drag the pound dollar down with it. Just always remember that, guys. But again, the neural index is positive. The RSI is still flat. Our MACD is trying to form a long signal here with the predicted differences. So I think that we still have risk in the UK with Brexit. There isn't much of a deal between the UK and the European Union. So there's, again, a lot of event risk in the marketplace with pairs like the Euro US and more specifically the pound dollar. Now, if the dollar can turn around this week, if the equity markets can turn around, then the US Swiss franc also could see a relatively decent long trade here. Now we've got very, very strong support that's coming in currently. That's sitting down in this 94 area, but the level that I'm really watching here would be 93.76. The bottom of the identifiable, I should say, bottom of this overall range over the last 3 months. We're holding above 93.75. While we continue to hold above that, longs carry a slight edge, but we've got to get the neural index on board. The predicted difference is above the zero line. And again, if we click on our F8 on our VantagePoint software, this is how we get out in front of something. Because again, this is an outlook here, guys, not a recap of something that happened a month ago or 3 months ago. It's a forward-looking presentation, so we can identify these levels ahead of time. This presentation is being done on Sunday morning before the market opens, not after. This key level is 94.61. The very simple strategy is that if we can get above this level, close above this level, then we should see a reversal higher, likely back towards the 95.32 high. Now, again, that's potentially a very good trade, and we want to make sure that we've got all stops down below the 93.76. We don't want to get tagged out here by the brokers running stops in this particular area. Now, with the dollar yen mysteriously moves higher and then mysteriously moves lower. Now, when we look at where it stopped right on the T-cross long at 107.39. We were looking for this level to hold. However, my optimism on that level holding remains heavily guarded, and that is because we have the medium term crossing the long term predicted difference and the neural index is down. The RSI is below the 60 level, so we have no upward momentum at the current time. The question is, could that change, and what would cause a change? Well, the simple answer to that is a significant rally in the S&P 500. If it breaks to the upside, the dollar yen will absolutely follow here. But if the stocks fail around the levels that I discussed, then the dollar yen will break through this particular level. Once again, we go back to our F8 to identify an additional pivot area, 107.46. So if we start closing below 107.46, you can see you've got a bit of a cliffhanger here, and the blue line is not pointing up, it's not pointing down. It's basically dead sideways. So we use that level to look for a potential entry point. As we look at our three main equity currencies, which anybody who has followed me for the many years that I've been doing this between the VantagePoint AI and my Trader Planet days, we always look at these pivot areas. Now, these pivot areas, 135.94 and the T-cross long, but the predicted differences here are starting to push below the zero line. It's, again, a warning sign that these stocks could be getting ready to move higher because the US CAD feeds off the S&P 500. So if it's a good healthy S&P 500, then they're going to be buying Aussie dollars, Canadian dollars, and New Zealand dollars. That's pretty much a given. I used to call these, back in my Trader Planet days, I used to call these commodity currencies. They just simply are no longer commodity currencies, guys. These are equity currencies. They are having the most powerful reaction to any move in the S&P 500, and those three currencies, Aussie, New Zealand, and CAD. So again, if you're trading these three pairs, you need to be very cautious with that S&P, at least monitor that S&P 500 on or about a daily basis. Now, we do have very strong verified support here. That's coming in at the low 134.86. So again, also be cautious of a potential bear trap here. Usually selling around these areas is not a great idea. So when we look at this in Monday trading, we identify upside pivot areas, 135.94, but when we click on our F8, we can assess here that the VantagePoint blue line, our predicted moving average, is 135.66. That is an area that the minimum area that I would target for shorts, because Monday again is very choppy trade. When we look at the Aussie and the New Zealand, we can assess it's the same thing, but it's inverse. US Canada going down, meaning they're buying Canadian dollars, means Australia US, New Zealand US going up. So we, again, use those key Vantage Point pivot areas going forward into the week. 68.79 gives us our main pivot area. If we click on our F8, we get our additional pivot area here of 69.11, and we can further confirm that the market has been trading off this level for the last 3 to 4 trading sessions. Small moves on the Aussie dollar, guys, but small profits and lots of them. That's how we make money. That's the exact model of insurance companies. And then insurance companies are one of the most profitable companies on the planet. They don't make money by selling $1 million, a policy for $1 million. They make money by selling 1 million policies at $400 or $500 a piece. So those small profits add up to a very large amount at the end of the month, the end of the year. So even though the Aussie's only moving 30 to 50 pips a day, there's still money to be made there. The exact same thing can be said about the New Zealand US dollar. But understand one thing, guys, it's the same trade. So when I look at this, our key pivot area, 64.42. If I want to hone in on a closer area, then that would come in at 64.85. But 64.85 is the minimum entry that I would look for. That is consistent with the VantagePoint predicted low. But if we start closing below the blue line, then it's likely the equity markets are reversing. So with that said, this is the VantagePoint AI Market Outlook for the week of July the 6th.